Motilal Oswal Asset Management Company. He will be overseeing the business and investment functions for Motilal AMC. Pratik brings along almost 3 decades of really rich experience in wealth creation for all investors. And today he's been gracious enough to be sharing his time and his pearls of wisdom with us going ahead. So, Pratik, a really warm welcome to the Fisdom Wealthcast.
Oh, thank you so much, Nirav.
So, Pratik, without any further ado, I will ask the question of the hour, which is basically the question of every hour, right? There's a lot many things happening, right? We are sitting right in the middle of an ongoing geopolitical crisis in one part of the world. At the same time, the entire world is raving about inflationary worries, और साथ ही साथ ये चिंता है कि रिसेशन कहीं आ ना जाए. एडवांस इकोनॉमीज में बात चल रही है कि रिसेशन आ चुका है, राइट? पर साथ ही साथ अगर देखा जाए तो इंडिया में काफी कुछ अच्छा भी होता जा रहा है. ओवर द पास्ट couple of years we have been outpacing Chinese competition in small little ways, in small little segments. There is hope, promise. Our corporate margins are improving, our banking system is becoming healthier. There all the legs of the system, right from the government to private players to even households, are now kicking off the capex cycle. So there are a few reasons to even look forward to a fantastic growth story. But the bag is really mixed at this point in time. तो जनता का हर बार एक ही सवाल होता है जो मैं हर गेस्ट से पूछा और आपसे भी पूछना चाहूंगा. मार्केट क्या बोलता है? ये सबके चलते आपकी राय में हाउ डू यू रीड द मार्केट्स? आपके हिसाब से मार्केट क्या बोलता है?
देखिए, the world over, like you said, there are a lot of issues. Geopolitical, interest rate increases, liquidity tightening, etc. Now, are we untouched? No, we are not untouched. However, uh, we have been able to, as an economy, safeguard ourselves much better relative to other economies. So, agar aap, if you look around us, see what is happening in a country like Bangladesh, Sri Lanka, Pakistan, very similar countries versus us, they are not doing as well. Forex cover has run down, and they are having to scramble to multilateral agencies for funding, which is disrupting business there, which is disrupting business confidence there. Currency has seen a much sharper depreciation, and yet markets are probably not able to sustain. This is true for vast, I mean, I should not say vast majority, but many countries. No, we are different because we have one of the largest forex reserves with us. 8-9 months of import cover. More importantly, 5+ years of current account deficit is covered by our reserves. So, while growth is at a premium in many parts of the world, in India, we are behaving as if it is business as usual. We are okay to fund growth. We are okay to be an island of growth, and are able to take, large, trade deficit numbers in our stride, which have been happening month on month. So the big thing here that differentiates us is forex. Now, in this context, as long as this cover is there, that's a dam between us and trouble. Let me put it this way, easier to understand. Then we are looking at several things which may be getting positive for India. See, geopolitics कहीं हो रही है, होने दो. For us, it is a business opportunity. Our guys are not going there and fighting, probably for the first time in a major war. We are looking at it as a business opportunity, and lots are emerging. So, in some manner, it is West versus, let's say, a communist Russia, which then also makes other communist countries less amenable for sourcing and so on. So you have this China plus one sentiment which is going around. There are businesses which go to, let's say, Malaysia, Vietnam, etc. But let's say in a chemical space, business comes to India where we have a very strong ecosystem. Now, if you look at engineering, the other space, we all know we had a sprinkling of MNC engineering companies in the country. Now, if energy costs are getting so high in Europe, well, I think they are opting to manufacture more outside of Europe, and that benefits. I mean, numbers will tell over time. Today, it is a conjecture. The businesses they have, let's say, in India as well, and many of them are listed. That benefits the listed space. Third, a lot of this is also cyclical. We rolled out our PLI schemes at a point in time, and we are still rolling out. Okay, uh, for example, the housing market was not doing well for a great length of time, while those of US and many other geographies did very well. It was only over last 1.5 years that our real estate market has found its feet. Okay, it is in some manner also coincidence of cyclical recovery that is taking place here. PLI that the government has rolled out is bringing in capex in the country, bringing in a confidence in the country, whereas other countries are expecting a slowdown in capex. When economy slows down, when recessionary talks go up, capex is the first thing to suffer. In India, because of what has been the tailwind over past few years, that's been very different. Now, thirdly, if you see, in some sense, whatever is happening is reversing the direction of globalization. पहले आप सुनते थे कि हम ये नहीं कर सकते क्योंकि वी हैव साइंड अप ऑन WTO and there is a WTO commitment, etc., etc. And you got imports, and imports smashed domestic industry. Now, in some sense, every country understands that globalization, yes, good, there is merit in that thought, but we need to manufacture inside the country as well. Okay, there is a thought of make America great again. Well, we always wanted to make India great, which basically means getting more of the manufacturing ecosystem in the country. And if every country is speaking the same language, it kind of allows, or somehow it has coincided, the government of the day to provide that much longer helping hand to domestic businesses. So ये जो है आप जितने भी लोग सुन रहे हैं, their own businesses would be feeling it. If you are bankers, lenders, you would be seeing it in the businesses that you have lent to. Interest rates have moved up, yet you are seeing very low NPAs. Business confidence is strong, and people are talking capex in this country. So, yes, near term can be whatever, but medium to long term, people in the country are positive. So, that is the other big thing, and it's a confluence of factors, some global, some local, some cyclical, which are coinciding to, make us look a tad different from many, if not most other nations. Europe is grappling with energy shortage. So European economies, can't grow. For growth, you need energy and money. Uh, they don't have at least energy. US interest rates are moving up so sharply that there is this talk of recession on account of monetary tightening. So if you go around the world, apart from commodity countries which made hell of a lot of money in last year kind of a period and are still benefiting from the fruits of the same, India is one diversified country that stands out as a beacon of hope for growth investors. I think that will continue to be the case for some more time. When a lot of things normalize, others may also do well, but till then I think we shall continue to be that beacon of hope. Now, hence, uh, it is best to look at valuations in the Indian context rather than comparing with global valuations. क्योंकि अगर आप कंपेयर कर रहे हो इमर्जिंग मार्केट से तो उसमें चाइना भी आता है, उसमें रशिया भी आता है, places that people don't want to invest just now. That makes our weightages high. That makes us look more expensive, relatively speaking. Uh, but if you look at our valuations with our own history, we are motamoti 18 and a half times 1 year forward earnings, which is close to the average and I think very sustainable.
Yeah.
Uh, इतना ज़रूर कहूँगा कि bond rates have moved up, interest rates have moved up. So as investors, when people want to decide between allocating monies to debt and equity, today maybe debt will win, okay, and hence flows to equity may slow down, or let me say in another manner, expect markets to consolidate for some time, so that even this thing is taken care of. Or interest rates to at least point towards a decline going forward rather than staying stiff and on the upward journey. So we will talk more on that, but sense is that the continuous increase in interest rates on account of inflationary pressures, something that we have been reading about, should be coming close to the end. All commodity prices are down over last 1 year. Maybe oil, depending on which start date you see, is down. So it is a matter of time before you start to see inflation also fall and sharply. X of food, one should see X of food. If that starts to fall, I think the focus on growth, at least in countries like India, should re-emerge, and that should help market not only sustain but also move forward.
Yeah. Yeah, absolutely. So this one also, since you mentioned about the valuation thing briefly, I'd like to slightly delve deeper into it. एक ये मान्यता चल रहा है कि Indian markets are actually priced too aggressively at this point. The valuations are on the rich side. Uh, ठीक है, मानते हैं कि दूसरे इमर्जिंग मार्केट्स के साथ कंपेयर करना इट्स नॉट द राइट लेंस टू व्यू इट, राइट? और अगर खुद के ही हिस्टोरिकल पीई के साथ देखें तो भी काफी डिफिशिएंसीज होते हैं उसमें। जैसे कि अगर आप हिस्टोरिकल लॉन्ग टर्म एवरेज पी देखोगे तो it is also bases a very different composition of the index, right? When you compare the index today, the index back then, the P's are not, if the composition is not the same, how will the P sustain at the same level, right? But साथ ही साथ जो bond yield to equity का price अगर देखेंगे तभी भी थोड़ा सा rich side पे बताया जा रहा है इंडिया के वैल्यूएशंस को। सो a little bit more on valuation from your perspective is India और ये जो सारा decoupling story चल रहा है, right? काफी लोगों का ये मानना है कि ये टीना इफेक्ट है, there is no alternative वाला इफेक्ट है, because everything else is bad, India is receiving the premium. The moment other economies improve, India will correct. So some view on this valuation, and is it really a tina effect, or are we getting what we rightfully deserve?
Yes, I think I touched upon a lot of this thing in my opening comments. So one, I made this point of how these cyclical tailwinds are in India's favor, and it happens to different countries at different points in time. It so happens that it is happening to us just now. If you look at, let's say, a period between 2008 and 2020, US was the best performing market globally.
Mhm.
Okay, just to try and understand, we were a fast growing economy, but our markets did worse than the US in terms of returns. Now, as you pointed out in your opening statement, we are seeing resurgence of profits. Our corporate profit margins, which had fallen to 1.2% of GDP just 1 or 2 years, 3 years back, are now looking like closer to 5%. Now, shouldn't markets reciprocate and respond to that. So we are seeing that happening. Okay, and like I said, understand the world in terms of raging fires outside. We being in a fort of, in some manner, the forex reserves. Still, we have lots of it. We are able to function normally, and hence our markets are able to be more in line with our historical valuations. Historical valuation mein main bolunga, don't look at very long term, because like you said, indices have changed. There is a much larger percentage of more highly valued businesses in the index, higher P businesses than they existed in 2002. माने जो चीज 12% होती थी वो अब क्लोज टू 50% है. प्राइवेट सेक्टर बैंक्स, कंज्यूमर्स, इंश्योरेंस, रिटेल एक्सेट्रा इन दी इंडेक्स. एंड जो कमोडिटी पार्ट था, पीएसयू का पार्ट था, वो हैज become a significantly smaller percentage. So long period average P देख के सही अनुमान नहीं लगेगा, and hence we say look at 5 year, look at 10 year kind of P averages, and that will really look like more 18 and a half kind of number, which is where we are sustainable to my mind. But at the same time, like you said, bond yields are higher. So unless bond yields change direction, and I made a case that this could happen, we could be close to the peak of the interest rate increase cycle. Next month or two will bring that out in a much more clearer manner. If we are and it starts to look like peaking out, you get helped as equity investors, or equities have to spend time in a consolidation phase for let's say a quarter or so before valuations catch up. So that is something that one has to be prepared about. Now, the thing which has really differentiated us versus others, and this happened to other countries as well, is the coming of age of Indian domestic HNI and retail investors.
Hmm.
Okay, this time around, investors are coming to the market in a structural manner. They are showing the ability to not get scared of a market dip. They are seeing dips as an opportunity. Buy on dips, which used to be a great thing in the US. Even now you get 5 6 days of dip and you get a day of an increase. It is almost always on account of dip investors, as they call it there. I think that is really happening in the country. Markets fall 5 6%. People, I think, correctly believe it is a great opportunity to put in money, and we have seen retail investors, HNIs, come into the market on dips in a structural manner for the long term. It is no longer, I'll invest in this name and uh, I'll get rich quickly kind of stuff. It is investing in equities as an asset class for the long term. So this is happening because, to my mind, what is happening is Indians are getting a tad richer. So, for the same reason that more cars are getting sold in the country, people are flying more televisions get sold, all signs of improved prosperity, improved risk-taking ability is the reason why people are putting more money in equities. It could be mutual funds, it could be PMSs, AIFs that we run, it could be direct as well. So that is something that we really believe has started as our per capitas increase over the next 10 15 years. I think the 4.8 odd percent of savings that we have in equities will grow very very strongly over the next decade or two. So that again gives our market a strength that otherwise we would have not seen. So we seem to be decoupled from the West. One big reason is that it is not global monies which is, making our markets move. It is domestic money. So global money has become small in relation to domestic money. The way to look at the market now is global sell. Well, we may drop a bit, sell in the manner that they did in the past. Last year, when you saw over $30 billion of selling, they reduce that selling. They don't sell, forget buying. Our markets tend to move up because of domestic buying. And well, at some point in time, we are a good country. We hold the promise of growth. We have been growing. If they decide to buy, we get a very strong month, as it happened. Maybe part this month, maybe 2 months, 3 months back.
Mm,
So that is the manner of understanding us. We are a nice country, nice place to be in.
mm,
Long period growth story. It is our place in the sun. It's happened to various countries. Now it is our time.
mm.
Our investors are finding that risk appetite, coming into the market in a structural manner. The government of the day is able to give industry breathing space, trying to protect it from whatever is happening globally. That gives our industry that much more confidence to invest, and you get a good, great India story. You know,
Absolutely, absolutely. So Pratik, इतना जो बढ़िया आपने समझाया है कि India growth story, why is it so promising, and why is it that India is getting the premium that it's getting? It's simply because we deserve it. So इसी के चलते, like further, taking this point further, from your perspective, which sectors within India do you think will be in the first order of benefiting from this entire, growth story that is ahead of us?
yeah, so as of now, financial standout. Uh, the books have been cleaned. The lenders' books have been cleaned, and now they have capital on book. For 2 years, lending growth has been small, so they have capital on book. There is surplus liquidity on most banks in the system. Now it is drying up, but the ability to grow is there. The opportunity for borrowers to borrow from other avenues, including, let's say, offshore, is reducing sharply. Equity markets are no longer as conducive as they were, let's say, a few months back, which then means for growth businesses, debt becomes the prime source of fueling growth, and you are seeing the credit growth to now being more like 15-16%. Maybe base effect helps, but even for the year, expected to be 13-14% at the base minimum. And next year could be similar or maybe a tad higher. With clean balance sheets, with repricing of loans. So what happens is your deposits, the CASA stays at the same price, while the lending rates are moving up a tad, whatever is variable in your book. Most banks have been able to showcase some amount of margin increase. So this quarter has shown good profit growth for banks, and I think the markets have responded quite positively as well. I think this should go on for a few quarters, and this then becomes a good sector to be focused at. We are there. Maybe here, since the going is good, it is not only the safest of banks, which is how people were positioned, let's say, in periods which were not so good, but even the second tier banks, not top tier of PSU, the second tier of private sector, maybe they may also have their place under the sun. So that is one space that we are definitely looking at. The other is engineering. I made a case for the strength in the capex cycle.
Yeah.
Engineering companies benefit. Today's newspaper has this story of big data center land parcel being bought by an MNC company, which then means a lot of material goes into building it up, etc., etc. So it is a different kind of capex. It's not that coal-based power project kind of project. So it is not the earlier kind of companies which do well, but companies in the, let's say, electrical space should benefit from all of this. Cable guys, equipment guys, people who make transformers of better variety, etc. Should control systems should continue to benefit. Uh, Corporate capex of industrial variety should again feed into it. Apart from the fact that some of the MNCs, if not all, may choose India also as the sourcing base for global markets. And we have seen exports move up in some of these spaces, helping the sentiment there. So I think while valuations expensive to the eye, but given the strength in the order book, I think prices should sustain. There is a chance they may do well as well. Defense is a subset of this theme. One good way of benefiting from what is happening is import substitution. See, global markets are not doing well. So if you are trying to export to the world, you will face a lot of roadblocks. So substitution is a better story. So, engineering, whatever we spoke, was substitution. It wasn't, going to the world trying to find new markets. It could be a tad of that, but substitution is also feeding into it. Defense is mostly substitution. So we used to import as a country most of our military hardware. Now government has put out three lists and say, we need to do it indigenously. That definitely helps. The order books are looking good. Geopolitics of the day make this industry in let's say focus of the investors, and we have seen good value creation there. So this is a subset of the engineering basket that we are focused on as a house. China plus one we spoke about. While many spaces benefit on the margin, I think chemicals is something that has really benefited. We are a small part of the world, 3.5, closer to 4% market share. Most other countries globally don't want to do more of it. Maybe China does, but that again is an on and off kind of situation. That gives Indian guys a lot of room to grow, and we are seeing people put up capex there very very strongly, trying to double up over 3.5 years, and it can continue. So that is again a space that we are looking at. So these are the major themes. I think IT is something that one needs to look at. Next 2-3 months would clarify the picture even more. Today, the stock prices have dropped because of this fear of global recession and the cut in IT budgets, etc. However, a lot of what was going on was in response to what was experienced over the last 2 years of COVID. Okay, digitization, movement to the cloud, and so on. So the sense is that it can, maybe postpone a tad, but it needs to be done. Now, that is very, very important. It is on top of every management's mind. My sense is if there is any capex that will happen, it will be IT kind of a capex. So if this sense comes out, let's say in the new year, when MNC companies put out their budgets for IT, and they seem to be more impact than getting impaired, as is feared now, we could see this space perform better. There is an interesting thing which has happened in this space. The while the larger companies obviously have size leadership, the growth leadership is passed on to the not so large companies.
Yeah.
The order sizes are smaller. The smaller companies have themselves become larger in size, and hence they are now able to bid for most of the deals which are going around. and on their size, they are able to grow quite well. So I think that is the theme there. And as a house, we are focused, yes, on the larger names in this space, but also on the next ranks names which we believe are growth leaders. So I think we are a bottom up house, by the way, less of top down, more of bottom up ideas. It's just that, after the collection of ideas happen, I'm trying to put a top down जिसको कहते हैं, choga to it, so that I can communicate it to yourselves. Many of the names in the portfolio are otherwise bottom up ideas. In financials, apart from lenders, we are positive on insurance as well. I think that's a consumption play, a stronger growth business versus most FMCG kind of businesses, and maybe cheaper on valuations versus the FMCG kind of businesses. So, seen in this light, I think insurance businesses could do better as we go forward.
Absolutely, absolutely. So Pratik, we have hit a very interesting juncture at this point, and there are a lot many comments also that are coming up. In fact, those are comments, but they are posing questions. So I'd like to pick a few of them. There are a few interesting ones. So one question is on your perspectives on the US entering recession and its possible impact on India. What are your views on this?
So, when so one US recession is being engineered. Let us put it this way: they called people to office. People had so much money in the bank that they opted to not go to office. Office meaning, they were happy to not have a job. Okay, and hence inflation was really shooting up. So I think that forced the hands of the policy maker. आप growth क्यों करते हो ताकि लोगों को नौकरियां मिले, you know.
Yeah,
But this was a country where people did not need jobs, at least then, and they have then tried, I think, to my mind, to slow down the economy, because otherwise it was simply resulting in inflation. A
yeah,
lot of the other things have happened, commodity price inflation, etc., etc., which is further probably increasing the pace of tightening. But the basic thing is, you were growing, you were overheating, there were no people to give jobs to. Now that is changing. Okay, now if you see, more people are opting to get employed. You are seeing large numbers every month in terms of data. So when you say employment numbers are strong, see, employment, unlike India mein we are always available to be employed. Okay, there people were not available to be employed. Very different context.
mm,
So when you see a strong employment number, it means people are starting to hurt and they're coming back into the job stream. So
yes,
read it that way is my sense. I think you have got two, three numbers which are strong. Going forward, you should start to see unemployment numbers move up a tad. Okay, as they move up a tad, I think you should expect to see US also backpedal a bit on the strong pace of tightening that they are talking about. That is point one. Point two, till they don't have people to work, I think our biggest export to that market is software services, people. I think that part of the business should continue to remain relatively good. But yes, when the world growth slows down, it becomes very difficult to export more. Our exports have been stagnant at last year levels. In fact, you're getting a month or two of degrowth. That hurts. So in that manner, a US small recession, European small recession, larger recession, whatever, will hurt us as well on the export front. Now, there is a third dimension. When the world slows down, the commodity prices decline. Okay, you have seen oil price decline from 130 to close to 90, and a large part of it is on account of global slowdown. So, in some manner, if you're not able to export more, you're also saving some bit on the oil side. So, oil, $1 lower price of oil is a $1.3 billion saved for the country. So if we have seen that kind of a drop, it's caused a lot of relief to the country, maybe overall a net positive, not a net negative. So there are multiple manners in which it plays out. Good thing is that the Indian economy is very, very diversified. And while one part of the market may get hurt because of whatever is happening globally in terms of growth, there is another part which may get positively impacted as well. So I made that point. Financials today are looking good. If this thing drags on, maybe things will change. But today they are looking good. Export-oriented businesses may not be looking as good, but export-oriented, once again, if you see, you have seen a strong depreciation in the currency, 282, 83 levels from close to 70. So 10 on 7, so 13, 14% kind of a depreciation on the currency is something that you have already witnessed. That gives some amount of margin increase to our software guys.
Yeah.
So that again gets help. So it's multiple things, but in short, expect sales growth slowdown for sure. Trade deficits to remain high. That is the other outcome. But like I said, we have a stash of forex that helps us protect ourselves from the global slowdowns. Otherwise, it would have been bad. So, if you look at countries with lower forex, they got decimated when, let's say, people stopped moving around. Tourism fell, for example. So, Thailand actually opened up in the middle of COVID. Sri Lanka, half the problem is because tourists don't happen anymore,
Yeah.
kind of stuff. So, we are a diversified economy. One part gets hurt, the other part holds on or may get supported a bit, providing us investors some leeway to find nooks and corners to invest.
Right, right. So to whoever asked this question, fantastic question. I feel Pratik, you have also responded to this rather elaborately and fantastically. So India is a strong, diversified economy. So there could obviously be certain ripple effects that will impact certain parts of India. But we are relatively insulated, and ek agar hurt hota hai, dusra will make up for it, right? So, Pratik, this brings me to the last question posed by an audience. Obviously, guys, there are a lot many questions. I know I'm not taking all of them due to paucity of time. Please write to us at research@fisdom.com and we'll try to resolve your questions. But today, I'll be taking this one final question. And Pratik, this question is about your perspectives on the chemical industry. What are your views on the chemical industry as a sector?
I touched upon it. I am very positive on this space for the medium to long term. This is one space where I believe the volume growth that you will see will be the highest. It is not a space which has pricing power, by the way. But the volume growth itself that you are going to see is higher than any other space, and for a longer period of time. So on let's say 20 or close to 20% volume growth that is possible, you build in your fluctuations of prices and margins to get the profit trends. But sales itself, which is the start point, is going to be very strong. We are sub 4% of the globe in terms of market share. Europeans are big in chemical space now. With higher energy cost, they are trying to diversify. So if you look around, I think yesterday's newspaper only talked about BASF setting up a huge facility in China. Of all places, China. Well, they have the ecosystem there, but such is the need of the hour that they want to diversify away from Europe. So this facility may have gone to China, but lots of business will happen to India as well. So there are global tailwinds that benefit the space. The industry globally is expanding at 3+%. Very few other countries have the ecosystem that India has, because in chemicals you should understand one guy's production is, or rather the waste is somebody else's raw material.
Yeah.
And disposing of waste is very difficult in this industry. So you need the whole ecosystem.
Yeah.
China had it, we have it, and very few countries apart from us have it. So we are seeing very strong growth. If you look at all large and small good companies, they are investing in a manner to double up capacities, to double up production over the next 3 years, and maybe they will do an encore after that. So this is what it is. I think so. Look at this with positivity. Yes, there are businesses with better corporate governance. I think they stand out. Then there are chemistries which are more difficult to handle, and they stand out. So I think that is the selection that one has to make. But otherwise, as a space, I think I would be very positive.
Thanks a lot, Pratik. I feel this brings us to the close of this conversation. But it was such a, although in terms of time, it was a brief conversation. I feel in terms of the knowledge that we have received and insights we have received, it was pretty power packed. So I feel the right measure to judge is by the insights and the tremendous value of such insights that you have shared with us. So thanks a lot, Pratik, for sparing the time and your insights and sharing it with all of us. I'm sure our audience has gotten a little bit more smarter than what they were when they started off with this conversation. So thanks a lot for that,
Yeah.
Pratik. Thank you
Thanks.
for being
Thanks,
here.
everybody. Have a great evening.
Thank you.